Hello everyone, and welcome back to Wisdom Lab, where we simplify the world's best books on investing, business, leadership, and personal growth. Today, we're exploring one of the most valuable investing books ever compiled, the Essays of Warren Buffett, Lessons for Investors and Managers, edited by Lawrence A. Cunningham. Unlike a traditional book, this masterpiece organizes decades of Warren Buffett's shareholder letters into practical lessons on investing, management, corporate governance, and business philosophy. If you want to think like one of history's greatest investors, stay until the end as we uncover 7 powerful lessons in just 7 minutes. Let's begin. 1. Buy wonderful businesses, not just cheap stocks. Many beginners believe investing is about finding the cheapest stock. Buffett disagrees. He believes you're buying part of a real business, not merely a ticker symbol. A great business has durable competitive advantages, honest management, predictable earnings, and the ability to grow for decades. Instead of asking, "Is this stock cheap?" ask, "Would I be happy owning this entire business?" Quality companies often outperform mediocre businesses purchased at bargain prices. Lesson: think like a business owner, not a stock trader. 2. Margin of safety protects your wealth. Even the smartest investors make mistakes. That's why Buffett emphasizes buying businesses well below their intrinsic value. This difference between price and value creates a margin of safety. Imagine buying a house worth $300,000 for only $220,000. Even if your estimate is slightly wrong, you still have protection. Investing without a margin of safety is like driving without wearing a seatbelt. The future is uncertain. Preparation beats prediction. Lesson: your first priority isn't making money. It's avoiding permanent losses. 3. Time is the greatest investment advantage. Buffett often says his favorite holding period is forever. Why? Because exceptional businesses become even more valuable over time. Compound growth works quietly but powerfully. A company growing earnings year after year eventually creates enormous shareholder wealth. Frequent trading often reduces returns through taxes, fees, and emotional decisions. Patience is one of the biggest competitive advantages available to every investor, and it's free. Lesson: the longer your investment horizon, the stronger compounding becomes. 4. Great managers think like owners. Buffett doesn't just invest in businesses. He invests in people. He looks for managers who treat shareholder money as if it were their own. They focus on long-term value instead of short-term quarterly results. Good leaders don't chase headlines. They allocate capital wisely, communicate honestly, and admit mistakes quickly. In any business, leadership quality often determines long-term success. Lesson: integrity and capital allocation matter as much as intelligence. 5. Ignore market noise. The stock market is full of opinions, predictions, and daily excitement. Buffett treats market prices as opportunities, not instructions. When prices become irrationally low, he buys. When markets become overly optimistic, he stays disciplined. He reminds investors that the market exists to serve you, not guide you. Emotional investing usually destroys wealth. Rational investing builds it. Lesson: Don't let market emotions control your financial decisions. 6. Simplicity beats complexity. Many people believe successful investing requires complicated formulas or constant predictions. Buffett proves the opposite. He avoids businesses he doesn't understand. He focuses only on companies within his circle of competence. Simple businesses with understandable economics often outperform trendy companies with uncertain futures. You don't need to know everything. You simply need to know what you know and what you don't. Lesson: stay within your circle of competence and master the basics. 7. Reputation is your greatest asset. Perhaps Buffett's most famous lesson has nothing to do with investing. He says, "It takes 20 years to build a reputation and 5 minutes to ruin it." Whether you're running a company, managing investments, or building a career, trust is priceless. Ethical behavior attracts better employees, loyal customers, and long-term partners. Shortcuts may create temporary gains, but integrity creates lasting success. In business and in life, your reputation compounds, just like your investments. Lesson: protect your character more carefully than your portfolio. Let's quickly review the 7 timeless lessons from the essays of Warren Buffett. 1. Buy outstanding businesses, not merely cheap stocks. 2. Always invest with a margin of safety. 3. Let patience and compounding do the heavy lifting. 4. Great managers think like owners. 5. Ignore market emotions and focus on value. 6. Stay inside your circle of competence. 7. Build a reputation that lasts a lifetime. These principles have helped Warren Buffett outperform the market for more than half a century. The remarkable part is that they're surprisingly simple.